Good afternoon, viewers. I am Dr. Amarjit Kaur. I am Professor of Accounting and a Certified Management Accountant. I am working with Gurugram University as Professor of Accounting and Dean Faculty of Commerce and Management. I am very happy to be present here to discuss the topic that how to prepare income and expenditure account for a non-for-profit organization. The agenda for next few minutes would be that I will discuss that how to prepare income and expenditure account with the help of one caselet. We will discuss the case and we will try to solve here itself so that you could learn the practical aspect of preparing income and expenditure account. In the part 1, we discussed that what is income and expenditure account, what is the format, what are the features of income and expenditure account, and in this particular part, which is in continuation of the previous part, we are going to discuss how to prepare with the help of one case. So moving forward, friends, we will take up the case. So let's have a look at this slide. It says following is the receipt and payment account of Mother Mary Medical Aid Society for the year ended 31st March 2020. So it says receipts and then amount. So consciously this slide we are shown in the statement format, otherwise receipt and payment account is prepared in a T-shaped format. Since just to have a better visibility and for you, we have prepared it in the form of statement, right? So the first receipt, it's in the head of receipt, it says to balance BD on 1st April 2019, 23,000. So friends, please be very sure that in case of an income and expenditure account, when we have to prepare, it's very important to note down the dates, because dates may demand the adjustments, right? So unless we read it carefully that what is the date of the opening balance, what is the date of any receipt or any payment, does this belong to current year or it belongs to the previous year, it really makes a difference. So your solution to the case, to the question would be based on the dates in your mind, right? So this particular data belongs to Mother Mary Medical Aid Society. So this is a non-for-profit organization, right? And the data is given for the year ending 31st March 2020, as you would have read it. Okay, but in the receipt and payment account, the opening balance is 1st April 2019, right? So that's how it means this data belongs to the financial year is 1st April 2019 to 31st March 2020. That is the financial year for which we are preparing the account for. Okay, so the second receipt item it says subscription 5,64,000. The third item, as we would have noticed, is interest which is received by the organization, by the society, 3,000 rupees. So next amount which they received is donation of 60,000. And then it says 2 donations for building fund. So this donation is for a particular purpose. The previous donation 60,000 is a recurring nature, a normal donation amount, whereas this donation is for a particular fund, building fund, right? Then it says to health camp fund. So again this particular society has received certain fund but to organize health camps. So 1 lakh, this is a particular fund amount which received, so it is not going to be taken as revenue item. The next item is miscellaneous receipts 4,300. Then to sale of grass. The society may have certain area where they have open fields, certain grass is used there. So the society is selling it, and they receive 1,000 rupees out of it. So the total receipts are given 12,55,300. This includes the special donations. This includes the camp fund, the health camp fund as well, right? Now coming to the expenses, the payment part. So what did they pay? So the first item, buy health camp expenses, 68,000. So these are the expenses which are out of particular fund. You know, we have spent out of a particular fund. So we will discuss either we are going to take this here in the income and expenditure account or not. Then we have rent account. So by rent 96,000. So company has paid 96,000 as a rent for the building or for the office they are operating from. We have salaries. So next expenditure is 2,40,000 paid on salaries. So this is another recurring nature expense for the society. Then it says sundry expenses, 36,000 sundry expenses have been spent by the society. So it's a recurring nature expenditure. We would certainly consider in the income and expenditure account. The next item is buy investments purchased. So this society has certain surplus in the previous years. So the accumulated surplus amount, this has been invested by the society in certain investments. So and the society has received 3 lakhs rupees. So now you would be thinking either this is a recurring nature receipt or a capital nature receipt. Certainly this is a recurring nature receipt because the society would be receiving it on regular basis every year, right? So the investment purchased, whatever we spent, is basically is a capital investment. But if receipt from this investment in the form of interest is a recurring nature, investment in itself is the payments made against investment in itself are not recurring. That is a capital nature. It could be for 5 years, 3 years, 10 years. But any income received out of those investment is recurring nature, right? Then we have next expenditure for newspapers. Society may have spent on the newspaper, so 7,500. So next item given is medical equipments. So it means this is a society which are providing medical aid, as the name suggests. So they have purchased certain equipments worth 3,20,000. And then this is another capital investment. Medical equipments are not recurring nature. So they may be with the company, with the organization, they may stay with the society for longer period, right? It could be anything. It could be a BP monitoring machine or an anemia kit, or it could be your ECG machine. It could be any CT scan machine. Okay. Then we have buy balance CD as on 31st March 2020. So we have been given opening balance and we have been given closing balance 1,87,800. So this, because this is the balance given in the receipt and payment account. So the total of the payment side of course is and should be equal to the receipts. So 12,55,300. So it says prepare income and expenditure account from the above information. Also consider the following additional information. So what are the additional informations given to us? That is also very, very important to read. The first information says that subscription outstanding as on 31st March 2019 were 40,000 and on 31st March 2020 were 60,000. So as friends, please note down dates. As I said, dates are of utmost importance for preparing anything, either profit and loss account for for-profit organization and a non-for-profit organization income and expenditure account, as we are discussing, right? So subscription outstanding given is on 31st March 2019 it was 40,000. It means the beginning of the financial year, because our financial year is 1st April 2019 and is ending on 31st March 2020, right? So the subscription amount which is outstanding in the beginning is going to be treated separately, differently than the subscription amount which is outstanding at the last day of the current accounting year, that is 31st March 2020 in the given case, right? Then it also says that salaries which are outstanding of 31st March 2019 and 20 were 20,000 and 25,000 respectively. So which means on 31st March 2019, that is the beginning of the accounting year, the salaries were also outstanding like subscription, but 20,000, and towards the end of the year, which is 31st March 2020, the salaries outstanding are 25,000. So please note down, please write down these dates, because I am going to discuss the treatment, the solution, and the treatment to these two items of outstanding. Same head is same, right? Salary is outstanding, but since the date is different in both the amounts 20,000 and 25,000, the treatment, accounting treatment I mean, is going to be different, right? The other information, it says on 31st March 2019, the society had investments worth 1,20,000 furniture and worth, so investments of 1,20,000 and furniture of worth 1 lakh, on which we are supposed to charge 20% of depreciation, and it also has medical equipments valued at 2 lakhs, which is also subject to depreciation of 25%, right? So this is the whole information given to us, and we are supposed to prepare income and expenditure account. I hope you remember the format of income and expenditure account, which we discussed in part 1 today itself. So the first thing, certainly we need to draw an income and expenditure account format, and the format, as you know, is having 4 columns. The first column should have expenditure head, the second column would have amount head, the third column would have receipts head, and the fourth column would have your amount head, right? So this is the format which we discuss. Now I would discuss the solution to this particular case. So as I discussed in the part 1, that the top of the account, which is income and expenditure account, the first line should say the name of the society, the name of the organization for which we are preparing this account, right? So we are preparing this account for this Mother Mary Medical Aid Society. So you shall be writing the name of the society. Similar pattern, you could have a question or a situation where we have the name of the club, name of the RWA, name of a particular hospital, name of an educational society. So please write down the name of the society, club, or any non-for-profit organization at the top. Then you write down what you are preparing. So we are preparing income and expenditure account, that should come in the second line, and then lastly we should be writing the period. So for the year ending 31st March 2020 in this current case. Okay, so these are the very essential things to be taken care when we are preparing income and expenditure account. So as we know, the expenditure is, because this is a nominal account, and expenditure is going to be on the debit side of this account, right? So we will be writing all the expenditure one by one. We will identify and we will write here in the debit side. So the first important expenditure in this given example is the rent amount. I hope you have read that point of time when we showed you the slide. The rent is 96,000. There is no adjustment pertaining to rent. So this whole amount of rent would be written here in this part, right? Now coming to the second head. The second head, as we showed you a few minutes ago, that in the expenses we have this after rent we have salaries. Salaries were 2,40,000, right? So this 2,40,000 amount will go here in the debit side of income and expenditure account. So that's how 2,40,000 salaries are shown. But is this 2,40,000 the amount you see here? No. Why? Because there could be something which is either outstanding or received in advance. So let's refer to the note, because in case we need to make any adjustment due to outstanding amount or due to your amount received in advance, so we shall be making an adjustment. So I am going to show you how we make the adjustment in the case of salaries, because the amount given of salaries in the case itself was different than what amount you have shown you in the solution. So coming to the working notes, the first working notes shows you the salaries adjustment. So the amount given in the question, in the case, is 2,40,000, right? And when I was reading the case, I told you to please note down these dates. So we are going to subtract the outstanding amount of salaries which was there on 31st March 2019, and we are going to add the amount of the outstanding salaries which was on 31st March 2020. In the receipt and payment account, we would have taken the whole amount whichever is received in the current year. So this is the amount which has been received in the current year. But mind you friends, this 2,40,000 less 20,000 plus 25,000, it becomes 2,45,000. That's how you have 2,45,000 amount of salaries which is there in this particular head of the expenditure shown in this solution to you, right? So I hope you noted down that anything which is there outstanding in the beginning of the current year, that actually belongs to previous year, right? In the previous year receipt and payment account, we would have in the previous year of income and expenditure account, we would have actually shown it, we would have added it, because it would have been the last day of the financial year, the previous financial year. So we would have added already. So we would have made the adjustment. So how can we record it again for the second time in the income and expenditure account when we receive it in this year? Last year it was not received, that's why on the last day it was an outstanding amount, and we have received in the current year. So anything which is received in the current year, doesn't matter belongs to previous year or the future year, is shown in the receipt and payment account, but not in income and expenditure account, right? I hope you are clear with this adjustment. So we get 2,45,000, the net amount to be shown against salaries. So coming to the third item of expenditure is newspaper expense, which was given to you 7,500, as it is no adjustment required. So we have taken this amount 7,500 as an expenditure head of income and expenditure account, right? Then we have sundry expenses. Sundry expenses are also 16,000, and there's no adjustments which is there pertaining to the sundry expenses. So we have taken as it is the whole amount of sundry expenses. If you notice, this amount of sundry expenses was 36,000 in the question, and that's why we have taken this 36,000 in this head as well. The next item is the depreciation. Now depreciation was to be charged on two items. If you read the question carefully when I was reading it, the depreciation on furniture and depreciation over the second item was equipment, the medical equipment. So the rate of depreciation on furniture was 20%, and the amount of furniture in the beginning of the year was 1 lakh. So that's how it comes out to be 20,000. And amount of equipments the society has, medical equipment, they have 2 lakhs worth equipments and 25%. So 25% of 2 lakhs means 1/4, which is 50,000, and 1 lakh of 1 lakh furniture, 20% of 1 lakh, 20,000. It means 20,000 on furniture and 50,000 on your medical equipment, the total amount is shown as 70,000. In this solution, I have shown them separately, but you have the choice. You can show them together. You can show the working notes and you can show the amount total as 70,000 by showing the calculations on separately for furniture and separately for equipment, and the total amount of 70,000 can go here on the debit side, right? No, I will not discuss about the excess which is there in front of you. Let's discuss the revenue part, the receipt part. The first and the foremost receipt for any organization which is a non-for-profit organization is subscription amount, right? So the subscription amount given in the question was different than what I have taken in the solution. How come? The subscription in the question was 5,64,000, right? But in actual we have certain amount of subscription which was outstanding in the beginning of the accounting year, which was given in additional information, and that was 40,000. I hope you noted it down. And we have the outstanding amount of subscription towards the end of the accounting year worth 60,000. Okay, so 5,64,000, we will subtract 40,000 and we will add 60,000, right? So it becomes 5,84,000. So the adjustment of subscription is very much like on the same pattern we did it for salaries, right? So total amount of 5,64,000 would be shown as in subscription amount on the credit side of your account. That's how 5,84,000 comes in. I would suggest viewers, please make sure that you prepare working notes and show the numbers of the working notes in the solution itself. That really makes it a very good presentation. On the same pattern I did. So if you have noted down, I have written note 1, note for the salaries, and note 2 for the subscription, right? Same thing I recommend you to please practice and follow. The next item of receipt is interest. So the amount of interest received has been written down because this is a recurring nature item. As I discussed that the investments are not going to be recorded. That is an expenditure of regular capital nature. So we did not record the capital investment, but the receipts out of the investment, be it interest, be it your dividend, they all are going to be recorded on the receipt side because they are recurring nature items. Okay, so that's how we recorded the interest amount here. So out of the donations, there were 3 different things which we received. We received donations of regular nature of 60,000, which we are taking here in the revenue side of the income and expenditure account. But friends, there were 2 more receipts. One was your amount of receipt which was received for a building fund, and there was another receipt which was received for health camp fund. So 5 lakhs we received for building fund as a donation, and there was 1 lakh rupees which was a peculiar kind of fund which was health camp fund, 1 lakh. These 6 lakhs we are not recording anywhere, mind you please, right? So we have recorded only 60,000 of donations which are of recurring nature in this question. Okay, and lastly, the last item is sale of grass. So the whatever we get 1,000 rupees in this given case, because again this is a recurring nature item. So the bottom line is that we should be recording only those items which are of recurring nature, right? That's why, because the organization may be selling grass very frequently. So the sale of grass of 1,000 is taken as a recurring nature item and is shown in the receipt side here. Then the last item is miscellaneous receipts of 4,300. So this would be the last item in the receipt side. Now if we make a total of and the total of both the side should is not likely to be matched ever. So if we make a total of credit side, which is receipt here, it's coming out to be 6,52,300, and the total of debit side, which pertains to expenditure, is lesser than this amount, and this is lesser by the amount I have shown you, by 1,97,800, right? So this amount is basically the surplus, the excess of income over expenses, right? So this means this society has a surplus amount because the revenue side is higher than the expenditure side. And had it been other way around, had your expenditure been higher than the revenue, then it would have been your deficit and would have been shown on the credit side, because we always show the difference on the side which is lower in value, right? But the account's balance is known by the side which is higher. So people take some time to understand this fact in accounting, but this is a reality. You need to understand that. Okay, so now let's have a quick quiz kind of thing. I'm giving you quick thinking points. First question is, income and expenditure account is what? Which type of account? So a quick recall, it's a nominal account. I discussed in the beginning itself, right? So the answer is nominal account. The second quick question, income and expenditure account records transactions of which nature? Revenue or capital, or both revenue and capital? Certainly the answer is, it records only revenue nature item pertaining to receipts and pertaining to expenses. Alright, the third and the last question I would like to take here, the revenue account prepared by a not-for-profit organization is called what? Certainly I believe you have learned that this is called income and expenditure account, right? So by this I will end this session. I hope you understood, you gathered that how do we prepare income and expenditure account. And just to recall, this is a nominal account, so the rule of nominal account is applicable. We do make adjustments pertaining to any item which belongs to either previous year or the future year, that is adjusted, and that's how we prepare income and expenditure account. So thank you very much, viewers, for being with me. Thank you.